Hey, I'm just going to jump right in. I don't want to waste a lot of time today because I think this one's going to go a little long. If you've been following me doing these things for a while, you know that this is my favorite one to do. So we've got the the monthly stats for October are out. So I'm going to kind of tease that apart and start talking a little bit about kind of what's happening, what's going on, what to expect, what's in the news. You know how this works, right? So, with that, I always kind of start off that same sort of euphemistic question. Hey, Jeff, how's the market? So, this hit the Oregonian the other day, and this pretty much sums up how's the Portland market. We've hit the highest sales price ever. We got low inventory. We've got pent up demand. So how's the market? It's crazy, but it's changing. So it's kind of an interesting time to be sort of looking around what's going on outside. I'm also going to say here that if you're watching this, and I'll try to repeat this a few times, if you have questions, comments, whatever you want me to hit on, if you put them as a comment on the Facebook feed here, it will show up on my side, and I'll do my best to try to answer that and respond to it, or see what you send me. Anyway, all right. So other than that stat of, the market's crazy and there's no inventory and demand, supply, demand, prices go up, right? So this is that lockbox activity. So we hit this one every time. It's a week-to-week change for every time Jeannie and I open up a door or other agents. That's a lockbox activity, gets logged, and you start seeing those week-to-week changes. So in the Portland side of the river, down almost 7% from last week. On this time around, I thought I'd add in the red line. The red line just sort of shows where we are now, so you can look backwards to see how do we compare to about this time last year. And you kind of have to sort of guess where the second data point is on the far left, and that's where you'll see compared to a year ago. But simply put, compared to a year ago, we're actually down a little bit on the lockbox activity for the week. We had been holding steady, either at or above. We're a little bit down this week. So we'll talk about that here in just a second. Because if you look on the Washington side, Washington's closed, 18% down. It's craziness. So it's way down. They too, if you follow the red line to the far left, slightly below last year's pace. And Jeannie and I were talking about this morning of why, what would be causing us to be off pace from a year ago? To have a decline, no big deal, right? Seasonality kicking in, it's wintertime and so forth. But with as crazy as this market has been for the last several months, for it to be off pace from a year ago seems suspicious, I guess. I don't know what the right word is. My only thought here on this is obviously we still have kind of COVID's going crazy. We're starting to see all the press all over the place about the winter surge is starting. The numbers are going up crazy all over the place, and I think a lot of people nationwide we're sick and tired of this. There's a lot of fatigue, and so I think there's probably some people looking at this saying, if I try to buy a house now, I'm closing right before Christmas. I got COVID. I'm not going anywhere. We got family. So I think you got a lot of people just saying, screw it, pack it up. We'll get back to it first of the year. So we'll see if those declines continue through the end of the year or not. If so, then it looks like we're probably true, or we're just going to kind of magnify the winter effect, if you will. That said, it'll be short-lived. And any given year, our buying season starts in February. So if we shut down now, we'll be back January, February, cranking back up. So it'll be a short-term break if that's what this is. But, it's 1 week. It's not a trend, right? So, again, if you have questions, comments, observations, throw them in as a comment on this feed, and I'll see them. I'll talk to you. So, all right, let's talk about October. So there's this kind of the big eye chart that comes out for all the agents, and there's a lot to unpack, but I think the biggest things that we want to look at, so you can kind of see 2020, you'll see 2019, so you kind of figure out pretty quick how this works. It's going to show you October this year, September of this year, see that change, and the year-to-dates, which I get too caught up on year-to-date. Then 2019, you see last year, October, so you can kind of see how are we trending from last month. You see how do we trend from same month last year, right? So if you look at, say, new listings are up, and we're going to show this one again here in a little bit on different charts. So listings are up from last month, so that's kind of good news, right? If we've got more listings hitting the market, we should have more inventory, so that should be good. Listings are up 14.7%. That's good. But our pending sales are up 24%. Those are homes that are under contract. So how this all washes out, I think we're just going to continue to see the inventory pressure. And we're going to talk about inventory here more coming up. So that said, so our pending sales month over month are up. Closed sales are kind of starting to taper off a bit. Sales price is just going crazy, and days on market, it's fast, staying at 38 days compared to 54 last year. So this, when you hear folks like myself and Jeannie and others saying that the market is moving quickly, it's no joke. Anecdotally, I'll share this, and I'll be posting about this one probably later today. Had a client wanted to look at a multifamily home for an investment property. It hit the market. We put in our offer, I think, day one of it being live, and we were one of two offers on the first day. We got it, but you're talking about seeing property sight unseen at this point. So it's moving fast. So you got to be kind of buckled in and ready to roll if you're going to do it. So that said, our prices up 12% year over year. We're up 6.5% year to date this year. It's crazy. We're going to talk about prices, about is it unsustainable? Are we the unicorn in the Northwest or in Portland specifically? So let's just sort of keep rolling. You hear me say all the time, it's a supply and demand battle right now. So for the month of October, we continue to have 1.1 months of inventory. So think about that. If no new homes hit the market right now, given our pace of sale, we would be out of houses in just over a month. So 5 weeks, not even 5 weeks, right? A month and a day. So that's crazy. This is the lowest it's ever been since the RMLS has been tracking this, which goes back to 1999. So we've never seen it this low. These are uncharted waters. These things, if you want to think about it in terms of supply and demand, this gets fixed either by you have more homes that hit the market or the pace of sales slows down, right? So if we kind of look at it, let's look at the available listings. If our available inventory went up 20%, that 1.1 months of inventory would be 1.3 months of inventory. That's what the 20% increase in new listings. So you need that double-ended approach. You can't just do it by getting new listings. The market has to slow down, and you have to get more homes going in opposite directions of each other, if that makes sense, right? It's just kind of that's your math equation for the day. So that will come at some point. We're going to talk about a little bit of what I think may cause a bit of a cooling next year, but I don't think the cooling is going to be much. So, there you go. Inventory. It's absolutely crazy. If we want to dissect that a little bit further, we start looking at, and Southeast Portland just had the green box for no apparent reason. That's just where I left my cursor. But this sort of carves the market up a little bit of where is the inventory in general. So the high spot of inventory is in West Portland. They have a little over 2.5 months of inventory there. So that's going to kind of encompass your Bethany area, Cedar Mills, that kind of area. And what's causing that? I don't know. Jeannie and I were talking about that again this morning of why would West Portland of all places? And our first thought was, well, okay, it's higher priced homes, so that's going to cause a slowdown. But then Lake Oswego and West Lynn is half that at 1.2 months. So it's not pricing. So all I can figure is maybe that combination of pricing and kind of a bit more of a, what you call, I guess maybe a density of suburbia. And perhaps that's maybe not as desirable. I don't know. I don't know how to read the 2.7 months. The areas that are highlighted in green is everywhere where we have less than 1 month of inventory. Beaverton and Aloha is they're winning or losing, I guess, depending on how you want to look at it. They have half a month of inventory. So again, if no new homes hit the market in Beaverton and Aloha, they would be out of houses in 2 weeks. Just think about that for a second. And what I think is driving that is definitely price point, coupled also with the fact that you've got a lot of one-level ranch homes in that area, some of which have been completely dolled up, and they're fantastic. There's some great neighborhoods in there. And then just in general, one-level homes in general are so high demand on the Portland side and so relatively scarce compared to, say, like Vancouver, where they're a little bit more plentiful. So I don't know. But 2 weeks of inventory in the Beaverton and Aloha. So if you're looking at those areas and you're wondering, gosh, why is it so competitive and tough? Yeah, there you go. There's no houses, so everyone is chasing. So good luck to you there. Again, if you guys want to talk about this any further, I'm happy to share any of this data with you guys. And if you have questions, put them in the chat or put them in the comments, and I'll see them over here. All right, so let's move on. Let's kind of get back to our October trends and kind of where we're looking. This is what that tells the story, right? This is your active residential listings. The green and the blue are going back the last couple of years. The red is where we are today. Yeah, and if you look at, say, compared to like compared to 2018, we're almost half the available listings. There are no homes available for sale. So we talked about earlier about if your listings come up 20%, what does that do? And the answer is nothing. Right, it's more like you need more like a 200% or 100% increase, I guess, right? So there's just no homes that are out there from the listing standpoint. So let's kind of go next step here. Our pending sales. So our active listings are down, and pending sales were ever since COVID, we've been blowing the doors off the last 2 years. We are above pace on the pending, and that pending again, that's an active contract has been written on a home. It's in the process of moving towards closing, typically a 30-day cycle. So your listings are down, your pendings are up, and your accepted contracts are up. And then so here's where your saving grace. Then if you look at the trend line of the new listings that are hitting, we've been below board, but then for the last several months we've caught up, and for at least 1 month, it's not a trend yet, but for a month we're outpacing the last 2 years on new listings. And this makes sense to me. I think you've had a lot of people sitting on the sidelines saying, not going to do it, not in COVID. Nothing can make me want to list my house during a pandemic. Not going to happen. Then you get to October and people are looking at going, my prices are how much? What's my house worth? Yeah, let's sell it. Let's sell it. So now they're coming out, and we'll see how that kind of how that pans out or plays out. I can't even talk today. So there you go. Now, so I kind of made that comment earlier. Do we want to talk about is Portland unique? And if so, I'd say that puts us at a pretty high risk category. But this is a national headline coming out that metro home prices are up everywhere in the third quarter. So prices are just going bonkers. This is on a national basis. You see underneath the highlight, 65% of the metro areas have seen a double-digit growth in home prices. And I'm just here to tell you, I don't see this going away anytime soon. I think that the double-digit part may slow down at some point, but in terms of home prices being a safe harbor of investment, I can't stress that enough. I think it's such a solid bet. And then again, here you kind of see the pending home sales and what that's doing to year-to-date home prices. So on a national basis, up 6.2%. Portland, for frame of reference, were 6.5% on a year-to-date basis. That's on the Portland side. We're not counting Vancouver. So take that for what it's worth, right? We're sort of following national trends. We're not 2x. We're not making headlines one way or the other. Meaning we're not up 20%, and we're not San Francisco that's bleeding. But it's we'll talk about this a little bit more. But what's happening is it's COVID, right? People aren't traveling as much. And if they're not traveling, they're saving money. What are you going to do with this money you're saving? Well, you realize, wait, I got down payment money, or I've got this or that, or I've got clients who've said I've been stuck in my house with my kids and my family, and we don't have the home office, we don't have room for school. I need a better backyard. We don't have a big one. We don't have any backyard, so I need a house. And so people have realized there's a new appreciation for the value of a home. And I don't mean it in an investment standpoint in that sense. Yeah, there's value for owning it, building wealth for your family through the equity growth and the value of your home, but more so just that intrinsic value of it's home. It's where you live. It's where your kids are going to be. This is where you're all taking care of each other, right? Whether it's your hangout spot while you're just sort of hunkering down and not necessarily quarantining, but kind of just steering clear of people to stay safe. Some of you guys are still saying, hey, we're doing the group barbecues and parties and whatnot, and I'm not here to judge. You live your life, but what you're recognizing is it's hard to go out to do that anymore. A lot of restaurants and bars have a lot of rules and restrictions and so forth. So you're saying, let's do them at home. In either case, wherever you're at on the spectrum, your house is important, right? It's a focal point. So we're just seeing that. So now you talk about kind of long-term sustainability of, we have a lot of people looking to buy homes. That surge of demand is there. It's being picked up because of low mortgage rates and everything else. So is that really sustainable? and I made a reference a while back to maybe a few weeks ago about the replacement buyers and the stickiness of replacement buyers. Meaning you've got a large pool of people who are available, if you will, to be buying homes. So I got this fun little stat. You need about 4 million mortgage buyers a year, basically people buying homes, to have what you call sort of a stable market, right? So your biggest demographic patch of that it's your millennials, right? They're entering the housing market. They're looking to buy a home. They recognize the value of it. They want to own a house. So that big yellow band in the middle, across the spectrum, man, that's way more than 4 million. So there's a flood of buyers coming in. The baby boomers used to be all the talk, and they're trailing off. So they're still buying houses, but it's not the force that it used to be. So it's the millennials. That's what's going to be driving this. So the analyst who put this little data point together, he's basically predicting we've got at least a 4-year solid run in the housing market. So again, if you're looking at, do I put a little bit extra money in my 401k, or hey, do I maybe use a little bit extra money on my mortgage to get bigger house, better house, different house, fill in your own blanks? It's going to be a pretty good bet for the next 4 years. And maybe one of these, I need to do maybe one of these in the future outline. I put together an analysis to show basically if you have a little bit of extra money to deploy, where's it better? Is it better in your 401k, or is it better in a house? And I'm biased, but you know where that answer is going to be, right? The house wins every time. So we can talk about that. Again, I'm going to jump in. If you're watching this live and you've got questions or comments, put them as a comment. I'll see them over here and I'll talk to you. So, okay. So everyone's been talking about for a long time that houses are affordable, and the big surge is because of low mortgage rates, and arguably that's true, right? We had rates as low as 2.5, maybe even a little bit below 2.5 for a brief period. So they've moved around. That helps the affordability. Well, now we're kind of starting to see a little bit of an offset. Rates have ticked up a little bit, but then also with the price gains that we're seeing across the nation, you're having a little bit of an impact on affordability, right? So it's a little tougher to cover the mortgage in some markets. So that said, they look at this on a kind of a home affordability index, and they look at that based off its I think average area family income versus to the average home price in the area, factoring in 20% down payment and blah, blah, blah. And so basically 100 on the index scale means you're good, right? Anything above 100, you can afford the mortgage. So obviously if you're 150%, you're great. If you're 80%, the average family can't afford a house. That's a troubling sign. This is Portland market specifically. So you see, going back to say June of 2018, we kind of were breaking even on that scale. The red line is the 100. That's just it, right? So if you look where we're right now, I think it works out to be 128% of the mortgage. So we've been higher. When you look back at 2011, but that's coming off the Great Recession. That's when prices were tanked. We're way up since then, and we're still 128% affordability. So I would argue that Portland is a very healthy market. Wages are good, people are working, home prices are skyrocketing. They're still healthy. So there's no real concern popping in there. So the question now becomes really more so going forward, what do rates do from here, right? We have seen them tick up a little bit, right? We've seen, as markets improve, the output starts kind of coming back online, we're going to see upward pressure on your mortgage rates, and that's going to start impacting affordability and how that's going to work on the prices of houses and stuff. Not necessarily the price, but I guess how well you can cover it. So this has been your mortgage trend lately, right? Been a lot of downward pressure going back since December. If you look kind of like, say, for example, the orange line started off at 3.35, 3.4%. Yeah, and you're now a little bit, probably 3.2, give or take. So rates were trending down, down, down. And then if you look, whether you're looking at a variety of the mortgage products shown on this chart, the very last data point, they've all done the same thing, and they all ticked up. Any guesses as to what happened around the time of that uptick? And it's the election. So the election got done, and markets responded and said, this is completely apolitical, but they basically just said the election process is over. Now we know which way we're going. The markets can kind of relax. There was just turmoil before. So I think you would have seen this pop, had Trump won, you would have seen this. Biden won, obviously you're seeing it pop up. But it's basically saying, this part is now behind us. Election years are always crazy. So now we can kind of get back to business at hand. So let's kind of keep talking about what else is going to be driving the mortgage news. The headline came out, I think it was last week, 2 weeks ago. Pfizer made the announcement that they had a COVID vaccine that in trials is showing like a 90% effective rate. So they felt pretty positive about that. Obviously, the markets love the news because if we can get some sort of vaccine, we can get people calm, get people relaxed, we can keep people from dying, getting sick, and having lingering effects. And we can open up everything safely across the world. So this is not a United States thing, but this is a global thing. So the markets love that news. And so Pfizer made the news and rates jumped because the market jumped. The market loves good news like this. So you've seen it. There's another article that just came out today. I forget which clinic it is. Somebody else came up with their press release, and they've got a vaccine in the works with a 95 or 96% effective rate. So as this news comes out, I say keep looking to this as it's going to keep pushing mortgage rates higher. So if you're on the sidelines thinking, maybe I wait, I want to wait to see prices cool a little bit and then I'll buy. You may or may not see that happen. I don't think you will anytime soon. But maybe see a little hiccup if you wait, say in December and things really get slow, then maybe get a little bit of a bargain. But if your mortgage rates are up, you're still going to pay more money. So it doesn't really make any sense. The other thing, and this is why I shared this one just because I think this will be a fun one to watch. We'll just sort of see, and this comes off some thing I get in my email every day. And this latest graphic was 63% of student loan borrowers would buy a home if they didn't have to deal with all that student debt. All right, so think about your millennials. How many of them are saying, I totally would buy a house, but I'm socked with college debt I got to pay for, and I got to deal with that first. So now go back, and again, not political, please don't make it that, but one of the pledges or one of the ideologues, I guess, if you will, of Biden and some of those people around him is, should there be student loan forgiveness put in place? Should they just wipe the slate, right, wrong, or otherwise? We can argue that one all day long, but it's getting talked about. And so if that were to happen, 63% of that buyer population says, I'd buy a house, if I didn't have to deal with that debt. So I think this could be, even with rates ticking up, if something like this happens, you could see this being an explosive point of people saying, I'm going to reuse my cash because I'd rather live somewhere than be paying off student loans that are totally unaffordable. I don't know. I just throw this one out because I saw that and thought, let's see what happens. So if that one does come true and it's all over the national headlines in a year, you heard it here first. Yeah, this guy, chief economist. All right, and then it's just that time of year. You're going to see these headlines left and right, and I kind of roll my eyes in general on these, but they're still fun to talk about. And it's, should I sell my house? Should I sell my home now or wait till the spring? And we do get these phone calls pretty regularly. People saying, "I'm thinking about should I sell it now? Is it still a good time? Should I wait? What's better? What's better?" And I don't recall where this particular headline came from, but a lot of these are kind of real estate publications, in which case it's more about how to defend it and how to sell in this market. And you're going to sell when you want to sell. But so let's talk about that, right? What's happening as we go into this winter? Is it really worth it? Is this really the right time? It's winter, right? Well, then there's also just as many of these headlines saying, that it's the best winter sales season in years, or this slow season, maybe the hottest one ever. And really all this boils down to is you've got this unique time where there's no inventory available for homes. People are still just bloodthirsty for housing. They're looking, they're scampering, especially Beaverton and Aloha. If you're selling there, holy cow. So is it a good time? Yeah, it's a fantastic time. Is it going to be a terrible time if you wait till February, March, April? No, it's still going to be a ridiculously great time. So I think your key message is, I think we're going to see a little bit of a slowdown happening. I think our seasonality is finally going to kick in between now and December. I think it's going to be short-lived. I think our season's going to start back up in January next year versus February, where it usually starts. So it's, I think, for the balance of this year, it's going to be just a fine market. Next year is going to continue to be crazy. It absolutely just is imperative that if you're looking to sell a house, to buy a house, make sure you're working with a good team of people who knows how to get both parts done, who knows how to get offers accepted, who knows how to kind of out position against other people. And it truly is, it's a team effort. I'd love to say that, whatever Jeannie and I do is just because we're great and all that. And we are, but it's a great team of people, right? You need the right lender, you need the right title people involved, you need the right everybody. There's so many moving pieces here that it's just a fun market. So there you go. 25 minutes. That's not too bad. I've gone longer with less topics, so sorry about that. All right, that's your Monday update. You guys have a great week. I hope the rain gives us a little break here at some point coming up. But if you have any questions, comments, put them as a comment on this post on Facebook, and we'll get back to you. Otherwise, feel free to give us a call.